Have you ever found yourself scrolling through page 250 of your local stock screener and you just can't find anything that seems good? Sometimes, you find yourself doing this and you just decide to type in whatever you feel like and see what shows up. So, like the other day, I was doing it and I just did all of these good metrics, return on assets, sales growth over 20%, 45% gross margin. And usually you do this and you find a couple companies that might look all right, and it's like Apple, Amazon, Meta. And one thing that some people don't do is they'll go here and they'll do under $2 billion small companies. And that was the thing I wanted to see. So I did it, did all of these metrics, 15% net margin, sales growth, 20%, all that. And looking through these companies, a lot of them are hot pieces of garbage that just happen to have okay financials. And you may be thinking, like, small cap stocks, terrible idea. And I thought the exact same thing until I found a couple of companies that actually look kind of okay. Now, before we begin, you may be a little bit skeptical about this, and I would be too, because I am not a smart person. But I love looking into companies, reviewing their financials. I manage a portfolio of over $1 million through my college. I have my own investments that I manage. And I honestly believe that these companies could be okay. Can't recommend them to you because that is illegal. All I'm saying is do your own research and let me know what you think in the comments below. And also, I review stocks every day of the week, every week. Check out my other videos and all my reviews if you're interested. Make sure to subscribe if you haven't. Leave a comment what other companies you want me to look into, and let's get into the video. Now, before we fully get into this first company, I just want to point out some things that as amateur or novice investors should immediately be warning signs for you. First up, market cap at $21 million. Any company that is under maybe 500 million, you should consider exceptionally high risk only because of how small the company is. Another thing, $1 to 2.5 per share is pretty low. Considering their daily volume is 56,000, there are not a lot of people trading this, and the people that are not trading a lot of it. Warning signs, people. Pay attention. Another thing, institutional investors only hold 5.5%. Big investors are not interested in this company. Now, does that mean you shouldn't invest in it? Probably. I have decided to myself, would not recommend it to you. Horrible, terrible idea. Anyway, the company is called Performance Shipping Inc. And let me tell you something, this company is awesome. So, as you see by their beautiful stock chart, they used to be right around $600 to $300. This is most likely post reverse split. So now they are right around $1.76. And I know what you're thinking. That sounds terrible. And I thought the exact same thing when I saw it. But their numbers are crazy. So first of all, obviously massive share dilution recently. I believe that is because of the reverse split, just to be clear, which most likely happened in the past year or so or 2 years. But anyway, cash is increasing, sales are increasing, EBITDA has a massive increase, assets have a massive increase. Look at their gross margin at 33%. Net margin is negative, which is kind of crazy, but that's actually the 5-year average. And 5 years ago, their net margin sucked. And now it is at 50%, which is insane. Look at these long-term growth summaries over here. 10-year sales growth, 7%, EBITDA growth, 15%, EBIT, 25%. I don't know what BVPS means, but ignore it. Everything else, 211% net income growth over the next 3 years. Estimate. Don't forget the estimate part. That is crazy. So usually I go through all of the financials of the companies and everything, but honestly, I don't care about that much right now. I'm only interested in the potential. So what we're going to do is head into their earnings report and really see what's been going on recently. There's a few things here that I just want to note that I think are interesting. First of all, 20% net income growth over the past year. Another thing is that they have $12 million available to common stockholders. That is their complete net income over the past year. Their market cap is $21 million, which means they can buy half of their own company just with their net income. that is one thing that I am extremely interested in, because what is going on there? How is this company only worth $21 million right now? That is something I am trying to figure out, but honestly, I don't really know. Another thing, again, strong third quarter performance. They're looking to grow their tanker fleet. This is a shipping company, obviously, but they're looking to grow their tanker fleet. They have strong demand projected in the future. They anticipate that they'll be able to continue profiting from their current vessels and secure financing for their future vessels that they want to purchase. Another thing is that they clearly have here that the reason their stock price is so low is because they issued shares at very low prices. So March 3rd, 2023, they issued shares at $225 per share. I don't know why this happened. I'm assuming they just needed funding, but it is interesting to note, at least. And also, just I don't know why this would happen, to be completely honest. And also, this is what drove the share price very aggressively down in the first place. So if we go over here to my chart and type in PSHG, we can see that their share price chart looks horrible. We could see 2022 an issuance, and then March 2023, or going into March 2023, another issuance, and their stock price just plummeted from 260 down to $1. That was catalysted by those offerings. So getting back into it, again, there is a little bit of concern because of why are they doing these offerings? Did they really need cash that badly and couldn't get any higher valuations from like institutions or anything? I honestly have no idea. But if you want to read through this, their market update is fairly positive. They're clearly looking to make more revenue in the future, grow their company further. But overall, I just think it's a very high risk and possible reward, maybe. They have the fair value set here, or sorry, the intrinsic value at around 575. So that is a 4x from here, which I mean could be, might not be. Me personally, I do believe this company is very undervalued. And one thing I will say about it is if you go into their balance sheet and look at their assets are quite literally worth $296 million. If that seems like a lot, it's because it is. That is well over 15 times their current market value, I think, if my brain is working right now, which I'm pretty sure it is. And that is a year ago. If we go into the quarters and we look at it now, it is at $320 million in total assets. That is crazy to think that a $20 million company has that many assets. So, end of the day, even if they just reach a 1-to-1 ratio with their assets and market cap, this company could see insane growth. But honestly, don't take my word for it. Do your research on this company and any other company that you might be interested in. But anyway, that is enough on the shipping company. Let's get into another company that's kind of in a similar situation, but honestly, I think we are seeing a lot more actual intrinsic value, solid growth in this next one. So let's get into it. And once again, before we fully get into this company, I just want to remind you, high risk warning signs, 52-week range, $3 to $217. This is a very, very high risk company. Now, market cap at 107 million, a little bit better than the last one, but again, any company that's under maybe 500 million, even then, is much higher risk than something that's 5-10 billion or higher, where there's a lot more people in it, there's a lot less volatility and possible volatility. So just some very, very important things to watch out for. Also, enterprise value right here is right at 100 million as well. So this company, in terms of their enterprise value, isn't really too undervalued just from that sense. But let's get into it, and I'll show you some reasons that I actually think this company is super undervalued. So I won't delay anymore. This company is called Global Mofy AI. I honestly don't know if that's how you pronounce it, but they are essentially software development. They make things like uh, objects in video games and animated things, gaming. They do a lot of different things just with software and sort of technology development, as you can see right there where it says that. Now, here's the stock price. And honestly, you could see the chart is rough. They very clearly fell off extremely aggressively almost immediately from IPOing. Definitely some issues there. Now, this is where we get into some things that I think are much more positive. First up, growth summary. Massive, massive growth. Just in the one estimate that's available, massive growth. Another thing, this means book value per share, which I just learned after Googling it from that last clip. Massive increases, which is good. Next up, let's head over here. Sales, 5 million to 26 million in 4 years. Now, another thing, EBIT, same increases. A little bit of shakiness in the middle, but that's most likely because of some growth opportunities that they've been taking. 6 million in net income is crazy growth from being negative 3 years before. We could see their shares outstanding, which again is a huge thing for a small company like this, has stayed the same. They are not diluting at all. Another thing, massive increase in cash, massive increase in assets. This is stuff that is incredibly important. Their long-term debt is basically nothing, especially when you compare it to their cash. They are not in debt. Their operating cash flow just went positive, which is huge. Free cash flow just went positive. In my opinion, this company has an enormous amount of potential that we could see in the future. Couple years down the road, this could be a really big change up. Now, margins, once again, 30% gross margin, fairly solid operating margin, net margin at 5%, which for software is pretty decent. You could see ROA, ROE going positive in the past year. We don't have the 2024 data in yet, but we're going to look at the earnings report right about now. Now, the screen probably looks a little strange, and that is because this company does not have any earnings reports on FactSet. Now, that's most likely just because they're from another country, and it probably is just harder to find, at least for the FactSet people, or they just haven't updated the information on this specific company yet. Could be whatever, but let's get into some interesting things I've found. So this is 2024 for their past period increases from 2023. This is information that FactSet does not have yet. First of all, revenues going from 12 to 19 million. Cost of revenues increasing still, but way less than how regular revenues have increased. Another thing, you can see that they had a massive R&D expense here at 3 million. They have now switched those expenses over to selling and general administration, which in my opinion is a sign that this company is starting to go into sales and revenue mode instead of just researching and developing mode, which again is kind of an obvious statement, but it is something interesting. Hopefully that means their revenues will be exploding in the next couple of quarters, which is what I personally am anticipating. And honestly, it seems to be that way for the near future. So overall, let me know what you think. You think I'm right that these companies could be good? You think I'm stupid? Let me know. Uh, Comment if you want any companies reviewed. I review companies every day of the week on this channel. Subscribe if you want to see those. I do almost every single company that is commented. So that's about it. Appreciate you if you did watch, and I will see you in the next video. And I am back. So one thing I do want to point out for videos like this, I am not a licensed financial advisor. I am a student. I cannot tell you what to invest in or what to purchase. Do your own research with any investments that you make. And if you do have any questions, contact a licensed financial advisor. I'm pretty sure that's all I have to say. I don't know because I'm new to this. But anyway, thanks for watching. See you next time.